What's up? This is Ryan with Planet Cheapskate. In this video, we're going to be going through all the details when it comes to qualifying for a USDA Rural Development Home Loan. What are the property requirements, debt to income limits, and all the unique details when it comes to using a USDA loan for your home financing. Also, be sure to stick around for a very valuable USDA loan hack that can potentially get you into a USDA financed home for $0, repeat $0 out of pocket. But first, I'd just like to take a very brief moment to personally invite you to subscribe and join our community. I do a home loan rate update every Friday going into the weekend, along with a new video every Thursday helping you manage through the world of credit, investing, real estate, and home loans. Also, when you do subscribe, be sure to hit that little bell and it will alert you whenever I release fresh content. Now, with all that out of the way, let's dive right in. So you're trying to decide which loan you should get. If you're unsure, try checking out my super quick video here that breaks down each of the 4 main loan types in under 2 minutes. But if you've already decided that a USDA Rural Development Home Loan is the loan for you, then you're in the right spot. A USDA home loan is a great option for someone who has a good credit score, but maybe a little low on savings and doesn't mind living in a bit of the outskirts of the city. There are many reasons someone may prefer a USDA loan to the other loan options. First, it allows for a super low credit score, potentially of 500, depending on the lender and circumstances on your credit report. It has the lowest funding fee and mortgage insurance than any other loan type that carry the same expenses. And finally, the best part is USDA home loan is a zero down home loan as long as your credit score is 640 and above. What I would say is maybe the worst part of a USDA home loan is that there's an income threshold that your household cannot exceed. So even if the individual is not on the home loan, if they're over 18 and generating income in your household, that income counts towards the household income calculation. The income limit in most areas in 2021 is $91,900, but it changes every year. So I'm going to leave a link in the comments below that will tell you what the income limit is for the year you are watching this video. One of the other things that could be a problem for you is with a USDA home loan is you have to purchase or build a home in a certain area, typically small towns or areas outside of the main city limits. This is because the USDA loan was created to promote growth and infrastructure development in rural areas that may typically take longer to develop under normal circumstances. I'll leave a link in the comments below to the USDA map because much like the income limits, it also changes every year as well. But one bit of great news before we move on to a more detailed overview of this loan type is USDA loans tend to have lower rates than conventional loans and are more on par rate-wise with FHA and VA. This is because the government loans have a slightly higher level of protection by way of Uncle Sam protecting the lender. So during the course of this video, we will cover each of these details a bit deeper than my introduction, and by the end of this video, you're going to know exactly what you need to know about the USDA Rural Development Home Loan. And after checking out my USDA loan hack, you will be skating to the closing table with nothing but pocket change in your purse or wallet. So when it comes to a USDA loan, you may qualify with a credit score all the way down to 500. The bad news is, when you qualify this low, the lender is going to make you go through what's called a manual review, which just means a human set of eyes are going to be reviewing your file using the USDA guidebook to see if they can do your loan. Usually, if you need to go this route, zero down is no longer an option, and you'll be required to bring funds as a down payment to qualify. Your credit will also be heavily scrutinized, and any negative trade lines such as past due payments or collections will be detrimental to your approval. If you've reached this point and are attempting to get pre-approved, you may have a better chance going FHA and possibly putting 10% down because FHA is a lot less strict on credit items. Speaking of credit items, USDA loans aren't the most forgiving when it comes to allowances and forgiveness of credit issues. If you have collections, medical bills, student loans, bankruptcy, foreclosure, and stuff like that, USDA loan is probably not going to be your best bet. For medical collections, they do not count against you as long as they are under $2,000. Most of your collections will need to have a payment arrangement or will need to be paid off before you close on a USDA loan. Now, if you've had a bankruptcy outside a Chapter 13, you'll need to wait 2 years until after the dismissal. For a Chapter 13 bankruptcy, you'll need to wait 1 year after dismissal and have no late payments and receive approval from the court. Applying with a foreclosure, deed in lieu of foreclosure, or a short sale, you'll be forced to wait 3 years until after the incident was last reported on your credit report. If you have student loans deferred or in forbearance, they're going to count against your debt to income for 0.5% of the total balance. USDA home loans, I have to say, have the least tolerant debt to income ratios out of any of the other loan products. Debt to income is just a ratio we use to determine the percentage of your income versus your monthly debt obligations. This gives the lender a good idea if you have enough income to make your payment plus keep up with your other bills. For USDA loans, the front end limit is 33.999%, and the back end DTI ratio, which takes into account all your other debts and your proposed housing payment, cannot exceed 45.999%. On a manual, if your score is under 640 but over 500, it's even worse. These loans cannot be over 2.999% front end and 41.999% back end. Again, I hardly ever recommend going manual on a USDA, and FHA is so much easier to get an approval for. Loan to value on a USDA home is pretty easy because 9.9 times out of 10, these loans are going to go zero down, which means the lender is bringing 100% of the funds, which just means the LTV is 100%. And actually, with the funding fee, it's 101%. So next I'll explain a little bit about the mortgage insurance and funding fee. On the USDA rural development loan, there is a small, relatively speaking, funding fee and monthly mortgage insurance. The one-time funding fee is 1% of the loan amount, and the monthly mortgage insurance is 0.35% of the financed amount divided by 12. The monthly mortgage insurance is kept in your escrow account and paid annually on your behalf from what is collected. The mortgage insurance stays on the USDA loan, unfortunately, for the life of the loan, so the only way to get rid of the mortgage insurance is to refinance out of the USDA loan. There are no loan limits on a USDA loan. However, there are income limits that sort of restrict high rollers from using this sort of loan. The crazy thing about the USDA loan limit is they do not just apply it to you or anyone else on the loan, but anyone in the household that is over 18 and making taxable income. So currently in the year 2021, the income limit is $91,900, but it changes every year. So I'm going to leave a link in the comments below and you can look it up for whatever year you're watching this. So for a USDA loan, you will need 2 years job history, not necessarily with the same employer, but within the same industry. And a very important detail here, the same payment type. So if you've been working a year and a half getting a salary and then you go to a new job making a commission for the last 6 months, you'll be required to earn a stable commission for 1, sometimes depending on the lender, 2 years before you can be accepted. The only exception to this 2-year employment rule, much like the other loans, is if you were in college going to school towards a career, you received a degree, and in that case, you would just need to provide your transcripts, college certificate, and an offer letter from an employer. If there were any gaps in employment over 30 days, you'll need to have a letter of explanation and usually have at least 30 days pay stubs or an offer letter from an employer. When it comes to USDA home loans, we all know by now you may be able to qualify for a zero down payment loan. This does not mean, however, you'll not have any funds to close required. You will still have the typical closing costs associated with a loan, such as title fees, property taxes, escrows, homeowners insurance, etc. Now, there are ways to offset even these expenses, and you can do that 3 ways. First, you can negotiate for seller credit up to 6% of the purchase price to offset your closing costs. Seller credits are just funds the seller agrees to give you from their proceeds to offset your loan costs. Another option is to take a slightly higher interest rate and receive lender credit to offset your closing costs. Now, technically speaking, one could use this method to completely offset 100% of your cash to close, as long as you were okay with a higher interest rate. Now, the third way to offset your closing costs will be shared with you as my loan hack at the end of this video, so be sure to stick around for that, because even many loan officers don't even know it's an option. USDA appraisals are very similar to FHA and VA appraisals, as they are much stricter than their conventional counterparts. It's important that you address any of these issues before the appraiser steps foot into the home. Broken windows, rotted wood or panels, broken or malfunctioning home utilities and appliances, exposed electrical wires, and chipped paint. And for some weird reason, they're super strict when it comes to chipped paint on all the government loans. So if you see that, know you or the sellers must address it. So finishing up the USDA loan details, You may use this loan for a primary owner-occupied residence only. The property must be in an approved USDA area from the USDA map linked below. The property cannot be any sort of income-producing land like a grain or dairy farm, for example. One final very important detail in regards to the USDA loan is it basically needs to be underwritten twice. Once by the lender and once by the USDA. So typically the USDA underwriting is very quick and it's just a look over and a stamp of approval, but this review can sometimes delay the process or even the closing of your home, as once the file is sent off to USDA, there isn't anyone associated with your loan that can make them move any faster on the review. I've seen some reviews come back in 2 days and I've seen some in 2 weeks. Everyone must just stay patient and understand it's out of anyone but the USDA's hands at this point. So as promised, an amazing loan hack that can potentially get you into your home for $0 out of pocket. This hack is actually only available on a USDA home loan, and the details are this. If your home appraisal comes in above value on your USDA home, then you can actually increase the loan amount to whatever the home value is to help you offset closing costs. These funds must be used towards closing costs and cannot be issued to you as any sort of a cash credit at closing, however. So for example, if you purchased a home for $180,000 and the appraised value of the home comes back at $185,000, you can technically add $5,000 to the loan to offset your closing costs. This could potentially be combined with a seller or lender credit to have you get into your USDA home for $0 out of pocket. Isn't that amazing? So there you have it. Everything you need to know about the USDA Rural Development Home Loan, along with an amazing loan hack that can get you into the home you love for $0 out of pocket. Please leave a comment below if you feel like I missed anything or you have a question. I'd love to hear from you. And listen, if you gained value or knowledge from this video, do me a huge favor and smash that like button so more people just like you can see this info. And if you like this video, I'd like to invite you to watch one of my other videos. Over here, I walk you through the complete home buying process step by step, and over here, YouTube has determined that you may enjoy this video. Thank you for tuning in. Until next time, best of luck.